Hello guys, welcome back to another lovely trading video. This is the second one for the day. We did do JP Morgan Chase analysis before if you want to check that out. But now we're going to be doing BlackRock because it's, well, the largest asset management firm and investing firm, and their earnings do have quite a big impact on financial services. And it's also going to be interesting to see as they're very close to $10 trillion AUM. So we could see if on earnings if that's going to be hit, because that will be a massive milestone. And BlackRock alone control more money than I think it's private equity, venture capital, and hedge funds combined, as a firm alone. So they are definitely big players and control, I believe, more money than anyone in the world. So firstly, looking at it, as always, we kind of do go over to the daily chart. And actually, one thing I do want to announce before is kind of what we're expecting on earnings. So analyst recommendations or kind of expectations are that it will be hitting around $9.63 per share on earnings. However, I personally, when looking at it, I can see them actually breaking that. I do see them having kind of a bit over the $10, maybe like $10.10. $10.20 on their earnings. So I do think there will be analyst expectations, but that's just my opinion. Also, the other thing to be keeping an eye out though is people are quite bearish on BlackRock lately. We have seen that short interest is up 11.9% since last earnings. So that's another key thing to be keeping an eye on, because obviously with short interest there is more risk. So firstly, as always, we kind of look into where are the gaps in the market, because they can sometimes be levels that we expect to get filled. So looking straight at it, we actually see quite a few gap fills that need to be happened, especially during late last year, where quite a few gaps were created. And then since then, we haven't really had all that many gaps, and the ones that we have had have been filled very quickly. And then one thing I have said, if you don't maybe watch many of the videos, is that when I'm looking at gaps, I want ones where they're not touching the candle and that didn't touch it the next day. The reason being is that it's a lot clearer to other traders and investors. So for example, this 890 level, yes, it would be a gap fill, but a lot of people just glancing at a chart may not see that level, because yes, it closed at around 890, opened the next day at 878, pulled back all the way to 887 before continuing down. So it did fill most of that gap, just not all of it. But you tend to notice that when they're not as clear, that they don't tend to have as big as reactions. So usually I don't keep an eye on those kind of levels, and instead stick to the ones that are strictly noticeable gaps, even if you're just glancing at the chat. So for right now, we kind of have a $600 level, 614 and 728. Problem with all these levels though is they are quite far off, so we wouldn't be looking to kind of hit into these levels off earnings. Or actually, we do have another level there at 767, but even that one, again, it would be quite unlikely to see that off earnings. So something we won't be looking for kind of right away, but is always a good thing to be knowing where the levels are. So now we're going on to the statistical deviations of the chart, and we can start seeing where it's likely to go off here. And we can see that BlackRock is actually a bit oversold as of right now. On the 4-hour chart, we are under the first deviation, and that kind of means you expect between this 863 and $1,012, you expect 68% of the data to be with, well, you expect 68% of the data to be within these kind of golden deviations. And as BlackRock's only really just come out of here for the first time, I mean, it briefly came out here, is that when you see a stock kind of breaking out of the first deviation for the first time, especially within the past 180 days or a year, it doesn't mean it's going to come back in instantly, because on a statistical basis, it will still be without the, well, outside of those deviations for still, 34% of the time. So that's kind of the key thing. Sorry, 32% of the time. So it doesn't mean that it's in any rush to kind of push back within. And the only reason we usually think it's going to break back within is because it's usually traded outside of those deviations for some part of the year. But as on BlackRock, it hasn't done that. We can see it staying out there for a bit. And then also on the daily, we are kind of hovering exactly on our first deviation level. And then usually when you see this kind of thing, the usual reaction is that it will consolidate here for a few days, maybe even weeks, and then you'll tend to get a large break to the up or down side. You can never really predict which way it's going to go. More likely than not though, usually 60-40, it will break down if it's consolidating on the lower band, and you will usually break up if it's consolidating on an upper band. So that's one thing to be keeping an eye out, but this will be most likely more heavily dependent on earnings. If earnings are better than expected, most likely break up, and obviously if earnings are poor, then most likely break down. So where are our levels that we would be interested in buying or getting long on BlackRock? Obviously right now, as we are below that first deviation, it is right now considered still a low risk entry. So that's always a thing. If you were looking to get long on BlackRock right now, it's still a good value at where it is now. And would be considered low risk. However, we tend to try and catch the reversal points, because if you're investing, obviously it's fine, but if you're looking to have a stop in place and it's going to be a risk managed trade instead of investment, you want to be getting in at a level where it's most likely going to have a reaction or a reversal. So you can either have your stop, you get stopped out, or you're going to be looking for your strong upside on the trade. And those kind of levels we're looking at to get that reversal zone will be around 790 / 788. Now, why do we see this being the kind of strong buying opportunity? And the reason for that is obviously that's the next deviation that we have to hit, and that's the second deviation on the 4 hour. And what we can see looking at when BlackRock has pulled back is that the first deviation on the 4 hour it actually reacted to. Didn't provide you a massive bounce, but does, as we always say, you expect it to at least pull back to the half deviation, which in this case you did. That's what you expect to see at the very minimum, but you have seen that on the daily chart. It's come into this deviation but hasn't yet reacted to or even done its pullback. So it is showing us maybe that slightly the 4 hour is the one to be keeping on more of an eye on, because it seems to be a bit more reactive. So that 790 level will most likely be a key area where we will at least see a pullback. And where do we see that pullback going to? We would probably be seeing that pullback to a minimum of around 524, 525, to basically to the closest deviation, and in this case it would be the half deviation at 825. So that would be kind of our key area that we'd be looking to get long. If it does continue down, both of these gap fills would again be considered low risk buy entries. Because usually when you come into gap fills, you tend to get reversals. Then where else do we see a buying opportunity? Don't really see it going down this low, at least in the near future, but if it did, 714 would be the other key level. And at 714, if it did push down to this third deviation, that is usually when I would do an increased size trade, for the main reason being, especially on a large cap stock, they don't ever tend to trade out of the third deviation unless there's very heavy news. I mean, even on Facebook, for example, we'll quickly get the chart, on all the bad news they're kind of getting right now, their services being down, whistleblowers, well, we still haven't even broken down to that third deviation, but even if you did, you would expect that reversal no matter what at that level, because to investors and or even traders, if a stock's down at that low, it means it is very discounted, at least based on its price for the previous year. So whenever a level comes down to that third deviation, if it's a large cap stock, it's very, very low risk to be getting along at those levels. And then another key level that we will be looking at is this 852, because that is the first deviation on the, second deviation on the daily. So kind of for right now, these will be our key long areas that we would be looking at, and we would expect to see some sort of a bounce at each of these levels. But the key one I personally will be looking at is this 790. That's the lowest I kind of see going now, unless earnings are very poor, and we'll kind of see this as a reversal zone. On the very extreme end, if it did break again down somehow past this third deviation, which would be, don't want to say impossible, because nothing's obviously impossible, but would be very unlikely. And that 660 would basically be a very low risk trade again. Now, if stock starts breaking up, what are our other key levels? Statistical mean is always a level you want to be keeping an eye out, because when stocks come into here, they tend to either get a sudden push or a strong push up or a strong push down. So you usually don't know which way it's going to go unless there is some kind of insight to the stock, such as news. But you will tend to get a strong reaction at that level, so it's always good to know where it is, even if we're not going to be trading off it, as it's something I don't personally trade off, but it's a good thing to be keeping an eye out, and especially be setting your alerts, because if, so for example, BlackRock comes into this 938, breaks to the upside, it would probably get that strong push, and you could see it kind of push to this 975 within just a few days. And then yeah, to the upside, our key levels where we would start looking to lock in profits if we were long, or maybe start getting some short position, would be 112 to 130. They're the only price targets we will do to the upside, because if it does break up that high, would be an all-time high, and we would make an updated video on it. But as you can kind of just see on the chart, if you did want those levels, I mean, they're quite clear where they are. And we trade all these levels the same, apart for the third deviation, I guess you can say. We trade that usually with a bit more size, because they do have a stronger or a better success rate. So that's kind of the overall breakdown on BlackRock. Their earnings will be coming out at 6:15 a.m. Eastern Standard Time, market time. So it'll be interesting to see that, because I'll be getting on this earnings call first, and then switching over to the JPM one when that one comes on. So hope you enjoyed the video, hope you see you in the next one, and that's it. Peace.